Hello, everybody, and welcome back to another episode of Trading Brains. I'm your host, Evan Greif, here with my co host, Angela Messina. Thank you all for being here today. We have an interesting episode today. We're going to be talking about my blog and how I'm trying to develop a blog so that I can, present stuff that interests me and just kind of put out the information that I've gathered so far in my life and just share it with people and then get feedback on that. And we're gonna go into what people can expect from the blog and what I plan to do with it. So yeah.
So yeah, before you start, I want to just quick question. So we talk about to the audience about this, why this is so important, why you want this to grow as yourself, and also what you want to give out to the consumer or the people, or the viewers who are going to listen to this.
Right. Yeah. So I would say that the primary focus of the blog itself, I'm going to be mainly posting content surrounding personal finance and investment, because I think that's something that affects every single person. It affects all of us, and there's a lot of, I wouldn't say misinformation, but there's a lack of financial education in our society. People aren't taught in school, and even sometimes by their parents, how to manage their money carefully, or not even just carefully, but in a way that makes sense for them, and in a way that protects the value of their money. So mostly I'm going to be talking about how to invest in the stock market. I'm going to be talking about really tools that can automate your investing, tools that you can use to make sure that you can kind of mitigate the sort of habits that have you spending more money than you would like to.
Like
Right?
mitigating risk.
Yeah, well, not just risk, but also mitigating, let's say you're somebody who tends to buy stuff with a credit card because it doesn't feel like you're spending money, right? It's just like numbers on a screen. For some people, some people have difficulty holding themselves back from making a big purchase, and then the next month they get smacked with a credit card bill that, they don't remember making that purchase, or they think to themselves, oh, I didn't really need that thing. So just kind of putting systems in place for yourself that prevent you from spending money in a way that you didn't plan on.
Okay. Yeah, this is funny that when we plan on having this episode, and the day before at work, I had a bunch of meetings, and we talked about our pension plan.
Mm-hmm.
And I would like to say fairly young, 28 years old, so young.
Yeah.
And basically, now I'm crap. I need to start worrying about my pension. What do I need to do? And they're telling us a bunch of numbers, and basically I just keep on going. The number dropped on our interest rate. So instead of getting 2.4 on every year, now we're only getting 1.7.
Mm-hmm.
But the 2.4 wasn't. It was before my time when I came in. Now I only hit in 1.7. So for me, it hasn't really affected me. It's just that my money's not doing as much growing
Right.
as possible. And their golden rule, which I just learned, which is it's your age plus the amount of years that you worked had to
Mm-hmm.
equal to 90, then you're allowed to retire. That
Okay.
got bumped to now 67 minimum in order to
Huh.
retire, and he hadn't lined it up with Social Security.
Right.
So I kind of just increased my timeline of retiring, so I have to work longer, which is
Mm-hmm.
fine. 67, I could still hopefully be a little bit more mobile.
Yeah.
But
I
sorry,
mean,
I just
I'm sure you'll still be kicking it at 67. I think you have the energy, but yeah.
well, there's a
Yeah,
little
but we
bit.
see your dad.
39 years I still have. Uh,
Yeah.
um, but yeah, that's financial education is so important to know, because it doesn't matter where you at in life. Everyone's in a different point in life. They just starting their career in their 40s, or 28 started their career, or they got so much money and they're only 18 and it's different.
Yeah, yeah. So I mean, like hearing you talk about pensions, and unfortunately, I can't really speak on that subject. I don't know actually how pension systems work, and I'd love to hear more about it from you. But if you look at the stock market, the stock market itself gains 7% on average every year. So over the span of 30, 50 years, it's going to be 7%. Sometimes it goes down, down to 4%, down 8%, but then a lot of times it'll go up 16%, it'll go up 20%, something like that. And so I think people in this day and age especially need to understand that they should be putting their money in these investments that are, hedging risk. They are lowering the amount of risk that you take on, but also maximizing the potential growth of your money. So this is just one of the subjects that I really want to dive into with this blog, and get sort of people involved and sort of build a community around it. And if I can educate somebody who has no idea, or give someone a first idea on how to budget, or how to improve their spending, or what credit card is probably the best for rewards, or even how to manage their credit cards to get the best benefits out of it without getting stuck with 24% interest rates on borrowing money. Yeah.
Okay.
So these are the kinds of things that I want to be.
Yeah, you're just trying to educate as much as you can, and give them, and trying to convert it into layman terms, in a sense, trying to make it simple.
Yeah.
Because I know a lot of people think about finance is a hard topic to talk about, because they get scared. Oh, I don't want to talk about my financial stuff because I don't know if I'm comfortable. I don't know if I have enough to talk about, because someone might have more, or I don't want to offend because I have more than the other person.
Right.
So that's also another thing, which I think finance is just another topic to talk about. It's, if you have more than me, good for you. If anything, teach me your ways if you have more than me.
Right. Yeah. And that's the kind of community I hope to build, right? It's not, I mean, you don't have to be radically transparent. I'm not asking anyone to show how much they have in their account or whatever.
Yeah.
If you want to do that, sure, by all means. In fact, I plan on doing that a little bit for myself. If I have an account where I'm planning on abiding by a specific investment strategy, then I'm going to post the results and the ongoing evolution of that investment strategy in the blog, right? So I'll put $2,000 in an account, and I'm going to invest based on these principles, and we'll just see how it goes, right?
Exactly.
And people can obviously follow that on the blog.
I know I'm going to talk about a little bit more in the recent posts, and kind of get a gauge for our viewers to see how your posts, equity analysis and price earnings. Can you a little bit dive in, give us a little little site, a little preview on kind of how your post wants to be like?
Yeah. So I mean, I don't have a way I want the posts to be exactly right now. I have 3 posts currently on the blog. Again, it's still relatively new, but the posts that I've made so far are 3 of them, and they are fundamental analyses. So fundamental analyses is when you take the financial structure and situation of a company by investigating their SEC filings, investing any financial statements that they've made of a company, and then kind of calculating what, based on those financial documents and the situation of the company, how much the price of the stock should be, right? So if you think this company is performing very well, their revenue is increasing a lot quarter over quarter, year over year, then their price earnings ratio is going up, and that means the stock price is probably going to go higher. Now, with these 3 posts I made about equity analysis: price over earnings, price over revenue, and discounted cash flow. So discounted cash flow is, I guess, the first one that I posted about, and that is where you say, you have X amount of dollars today, and at a specific interest rate for the next 5 years, how much money is that going to become in 5 years at a specific interest rate? And it's basically discounting the amount of money that you think you're going to make. So with the financial statements, I see for the past 5 years how much revenue the company has made, and there is a trend of how the revenue has been growing, right? So let's say it grows 40% year over year. Then if you just extrapolate that trend, 40% revenue growth over the next couple of years, then you can take the revenue amount that you have in 4 years later, and then discount it back to today, and say, okay, this target price today would eventually become X amount in the future. So again, that was a very rough kind of explanation of it, but if you look at the if you look at the blog post, then I think you'll be able to understand it a little more. And then
kind of predict with the cash flow on what's going to be in the future, if it's going to be a long-term investment or a short-term investment.
Yeah, a lot of investors who are value investors. So when you say value investor, everybody knows Warren Buffett. If you know anything about investing, you know Warren Buffett, and even
more for dividends.
Yeah. So he's very much a value oriented investor, and value is basically finding a company whose stock price is lower than what it should be based on the financial performance of the company.
Yeah, a lot of people are talking about, because I know there's different stocks, you talk about dividends, and that's your value that you get paid quarterly in different quarters depending on what share you buy. But I know a lot of people either buy long term or now big techs, and what dependent on the presidency, on the U.S. president, a lot of people do like to make that shift to stocks that they buy, as well as penny stocks too.
Yeah. I know people who are doing in penny stocks and that kind of stuff, trading. It's a different sort of way of looking at building money. I wouldn't call that investing. It's very much trading. It's high risk, high return, and that some people use technical analysis with that, and some people literally just follow what other people are investing in on Twitter or on Reddit or whatever social media, and kind of want to just ride the wave, what everybody else is buying.
New post idea.
Yeah. I mean, I could talk about that. Absolutely. Yeah. I don't really subscribe to that way of investing and that way of thinking, because I think it's very risky, right? You are investing in something that you don't actually know is financially sound, or if you know that it's a worthy investment. It's very much a gamble. And of course, like I said earlier, I'm going to make an account that's 1,000, not even. That's just going to be play money, where I'll just trade, and I'll just talk about the trades that I make in my post. But the majority of my money, I think, I'm going to keep in broad-based index funds across the market, so they're diversified, and that there's not too much turbulence and volatility there.
What is your end goal on this block?
Yeah, so my angle is pretty much what you said earlier, actually. I'm glad you brought it up. So turning personal finance into something that's not dry and boring for people. If you want that, I'm sure some of my posts may end up being that way. And the first 3 posts, as you can see, they're very technical. And if you want to get into the nitty gritty, you can. But like I said, I want to make personal finance something that's easily understood. You can grasp it, even if you just have a layman's vocabulary, because like I said, so many people don't really know how to handle their money. And I think a lot of it is that it's not that people don't want to learn how to handle their money, it's that they just don't know where to turn, or they don't know how to learn about it. And a lot of times, they don't know who to trust when it comes to deciding, how to invest their money. So I think I would like to be that sort of beacon of trust. And I'm not infallible. I'm human, and I make mistakes, but I try to take everything that I learn and implement it and be transparent in the way that I think about an investment. And I will, talk about the risks. I'll talk about the possible returns on something, and just Yeah, that's the angle, really, is spreading personal finance as uh, something that can be enjoyable in your life, something that doesn't have to feel like a chore, or it doesn't have to feel like, oh, I have to do it, and then you don't do it, and then you feel bad for not doing it. Like, it's just, I think you should have fun actually with your money and putting it into an account and seeing it grow, right? Without you having to actually spend your time or spend your labor, right?
Hmm. No, of course, like because money is like it's not like it grows on trees. Like yeah, depending on your paycheck, you get it back. You know what I
Yeah,
mean?
yeah,
Um, but like sometimes like that source of income, it's that can be stopped at any time. So you do need to prepare yourself for the worst and
hmm,
protect your money going in because
yeah, yeah,
every year, every time you print out money, the inflation goes up. So there's
yeah.
more
I mean,
cash in the market.
right now we aren't seeing inflation because we don't have a lot of goods that we're producing in the
Hmm.
U.S. And everybody's working remote. And there's a lot of people doing that, and a lot of the money actually that was printed and floating around is actually in the stock market rather than actually being in the real economy. Because if it was in the real economy, you would see a lot more inflation, I think. Again, grain of salt. I'm not an economist, but that's basically from what a lot from what I've heard and what I've learned so far is what's
Oh,
going on. Yeah, so personal finance definitely a huge aspect of this blog. Um, but
thank you for sharing us about your website and what you want to do in the future about this.
of
Um,
course, of course.
I know when you talked about this in the beginning, when you was like, "Hey, I'm going to make a website. This is a great idea," because I know you were always into it. And plus, we did a bunch of episodes in the past about personal finance, about different kind of credit cards, as well as different kind of banking, online banking to you. So this is actually a good way to talk about finance because training brain like that's what we want to do. We want to talk about every aspect and every topic around in the whole world and trying to spread just knowledge, just a little bit, just trying to pick up each other's brains.
Yeah.
Um,
For me, it's like, personal finance is just one of those things that I'm interested in. And my blog is just going to be me on a page. So it's not only going to be personal finance, but I want to be writing posts about music. I want to write posts about video games and about snowboarding, and I think that's mainly what it's going to be. Maybe some programming. I think, Python,
mhm.
programming stuff. And I think I'm going to tie the Python into the financial analysis type stuff because it can be used very well for that. But again, like this is all the ideas that I have for this blog.
Okay.
But
Yeah,
I think
slow and
mainly,
steady.
I think mainly that's what I'm going to be
Okay.
writing
I
about.
like it. I like it. Huh. I don't have any more questions. Um, I love that you're so enthusiastic on this thing, which you should be because it's a nice little project to have for
Yeah.
you.
I think at the beginning of the
Can't wait
episode,
to
maybe
see
not, but like as we got into the episode, we were rolling with it and just flowing with the conversation. So
yeah, exactly. Um, and like I don't have any questions, so I'm good. I learned actually I did a chunk of it, and I can't wait for the next post coming up.
thank you, man. It means a lot to me. And listeners, viewers, we really appreciate you guys always coming back and listening to our content. We know that it isn't always perfect, right? Both materially, right, with our
Yeah,
operation we have going on, and also with the content. But again, we're here, we're doing it, and we're trying to make it better for you all. So, if you have feedback for us on stuff you want us to talk about, you can reach us anytime at tradingbrainspodcast@gmail.com. All the links will be below this in the description. You can find us on Twitter, Facebook, Instagram, all of those social media websites. And my blog is at evangreif.wordpress.com. Again, that's evangreif.wordpress.com. And that's also going to be linked in the description below so that it's easy for you to access it should you be interested in checking it out.
and a little nice appreciation post to you guys. Like we have about 849 views on our podcast. And we want to hit the next goal. We want to hit 1,000. So hit that follow, hit the share,
Yes.
hit and share it to your friends. hey, could this, especially this finance video, could be beneficial for the next person. This is just a nice little topic that you could talk to your friends about. It's like, hey, how you doing? Oh, you're coming out. You just started a new job. Hey, listen to our friends, listen to our buddies or new people, or trying to take their brains since like we were talking about it. So a little
Yeah.
knowledge can go a far way.
Mm-hmm. Absolutely.
So thank you
Yeah.
guys for being there with us.
Yeah, and I really hope to post great content. And like I said, it's gonna be my brain on the blog, right? So it's just gonna be. I mean, it's just gonna be about money, video games, music, and snowboarding. So and maybe some other stuff. We'll see. We'll see. It's gonna be constantly evolving, right? Because people are always constantly growing. So.
Thank you.
All right.
Have a great day, guys. Be safe.
Hey, everyone. Thanks for listening. Bye-bye.
Bye.
Bye-bye.